Among the many, many things that have changed in 2021, two stand out. One, more people eating at home over the past 2 years, really. And two, prices, as we know, have been going up. Let's talk about these trends with Bryan Spillane. He is Bank of America Global Research Senior Food and Beverage Analyst. Good to see you again, Bryan. I want to ask you about the at-home trend, first of all. And, of course, people have been excited about being able to get out again this year and going out to restaurants. But how sticky do you think the at-home trend is going to be? And how is that going to play out going into 2022 and beyond?
Yeah, we think that there's a more permanent change in terms of just versus where we were pre-COVID in terms of just the amount of meals consumed at home. And I think probably one of the biggest things that we underestimated going into 2021 is just the longevity of this hybrid, whether it's people working 2 or 3 days from home or only a couple of days in the office. We are definitely seeing, just a change in behavior, a change in consumption patterns that has just lent itself to people consuming more at home. So I think that's the first thing. The other probably more shorter term variable is just going to be the cost of eating at home versus the cost of eating out. And, we've seen initially the cost of eating away from home really spike earlier this year. And now the cost of eating at home has also followed that. So the value equation between those two will be really important to watch over the next year or two. But the net of it is we think this hybrid situation is going to be with us for a while for lots of reasons. And that's going to, I think, just level set more meals eaten at home going forward than was the case, before 2020.
Well, Bryan, how do you trade this? Do you go through the frozen food section? Do you warm up to the soup aisle? How do you play it?
Yeah, it's so we're looking at it in a couple of dimensions, right? One is the companies that have exposure to both away from home and at home have performed pretty well. So think about like a PepsiCo, Hershey, right, where you can buy it in the grocery store, or people will buy it in a convenience store. These because right now we're in a position where both away from home and a lot of cases all channels are up. The other way to do it is also in beverage alcohol. You think about like a Constellation Brands where, they're selling beer in bars and restaurants, they're selling beer at home as well. So, those stocks that have kind of a leg in both away from home and at home have been a really good way to play that. We think that'll continue to be the case as we go forward.
That's a really interesting point, Bryan, because at the beginning of the pandemic, there was a lot of concern on the part of Constellation, for example, because they weren't selling into that. They didn't have that restaurant channel, right? It was closed.
Right.
So it seems like that it's interesting that you're pointing out that that's less of a headwind going forward because maybe they've expanded their at-home channel and now they're also getting the away-from-home channel back up and running.
I think that's part of it. And part of it is that you've got to register in every lane, right? If someone's away from home, you're there to capture them away from home. If they're consuming at home, you've got a way to consume them at home as well. So you contrast that with like a Campbell's soup, which, if you get into a position, they're overly people consuming at home. So I think having that, it's almost like a hedge, right? These companies that have that exposure to both channels, are going to be more resilient as the consumer bounces around.
Bryan, this has been a pretty good year for deals in the food space. I mean, top of mind for me, Hormel making the acquisition from Kraft Heinz of Planters earlier in the year. What companies are buyers and sellers of assets next year?
Yeah, so it's a good point because one thing that's happened or where we stand today is a lot of these companies had been acquisitive a few years ago, deleveraged their balance sheets. COVID hits, companies are hoarding cash, right? You don't know what's going to happen. But now we've got companies out there that have the balance sheet capacity to do deals. So think about Hershey's, who just made an acquisition of Docs. They've still got the ability to do more acquisitions. Smucker's, right, is another company that has really delevered its balance sheet. I think it is in a position and has been reshaping its portfolio in a position to do more deals. Mondelez certainly on its front foot in acquisitions, and they've got some equity stakes in other companies they can use to fund deals. We expect them to be acquisitive, and I think you'll also see potentially more moves within some of these mid cap stocks. Like a Bellring Brands or Simply Good Foods, which we don't cover. But these companies may become more attractive as acquisition targets as we move forward.
And Bryan, finally, as we look to next year, I mean, this year, the hallmark of this year for many of these food companies has really been margin expansion as they have had pricing power. What do you think is going to be the big sort of overarching theme next year? Is it going to be a continuation of that trend, or what's going to be the big thing that's going to drive growth?
Yeah, I think I think there's two things. One is going to be with the incredible amount of pricing that these companies have pushed through over the last 6 months, elasticity of demand. And I know we're seeing this across other parts of the economy with the consumer, but at some point, do consumers begin to push back on price increases and make changes? They're obviously going to eat and drink, but do they trade down? Do they buy less? Is there any kind of change in consumer behavior with regard to reaction to price increases? Because we really haven't seen that yet. I think the second thing, to your point on margins, it's going to be really important because even though these companies have raised prices, they haven't even actually been able to protect margins in most cases. So they've kind of price chasing the inflation. So I think another really important factor to watch, especially as we move into the middle of next year, where hopefully cost pressures have somewhat peaked, is which companies are able to either hold or expand margins off of this, and which ones might have to give back some of the pricing. But I think those are the two things: demand, volume elasticity, and then the ability to kind of hold or expand margins once inflation peaks.
Well, for sure, we'll be checking in with you as the year progresses on both of those fronts and many more, I'm sure. It's always a pleasure to talk to you, Bryan. Bryan Spillane is Bank of America Global Research Senior Food and Beverage Analyst. Appreciate it, Bryan.